Welcome to Nest Egg Narratives, the podcast exploring the future of credit unions. We sit down with leaders shaping the industry to uncover what it takes to serve members in a changing world. I'm William Glass, CEO and co-founder of Ostrich, and today's show is hosted by my good friend and co-founder, Mr. Andrew Holliday. Off to you, Andrew.
Mike, welcome to Nest Egg Narratives. We're excited to kind of talk to you about all things credit unions today and delve into how Garden Savings is shaping the future of community finance in New Jersey.
Sounds good.
But I want to start with your personal journey. I know you've got a great story about like how you ended up where you are with credit unions, but I'd love to go even earlier than that. Like, what's your earliest memory of money or finances?
Yeah, I guess I was probably about 11 or 12 years old. It's kind of funny. I was a big wrestling fan back then. It's
Okay.
WWE now. It was WWF back then. But I started thinking I was such a fan. I followed everything everywhere. I was like probably 11 or 12. And yeah, and I said, I wonder if I could make money off this somehow because I knew it. So
Okay.
I started writing a newsletter and advertising it in a wrestling magazine. And I wound up in like a thing where I was, selling my newsletter, which I was doing on a Smith Corona typewriter and sending it out snail mail
Wow.
with a stamp and making $1 here, $1 there. I think I had maybe
Wow.
15 subscribers, so I was getting about $15 a month. But that helped fund buying more wrestling magazines and comic books and all the stuff I was into as an 11 or 12-year-old.
That is amazing. What a story. I feel like now you get people doing these newsletters. It's so easy to do something on Substack, but
Yeah.
that's the first story I've heard of somebody doing a proper snail mail and setting it up at 11 or 12.
I,
What an amazing story. And almost as good as the story of how you ended up in credit unions. But I know that your first job was in credit unions. I'd love to hear that story. Did you have an awareness before that
no,
of credit unions at all?
no. Actually, it's kind of funny. I had graduated college in May of '93, and it was September of '93, and I was still just
Hmm.
working my college job. And my dad was like, "I didn't pay for you to go to 4 years of college to work at a bowling alley your whole life. So start looking for real jobs because my summer job was a bowling alley job, and those were late hours. So I'm still living with my folks, 3 or 4 in the morning. I'm coming in
Wow.
sometimes later, and my dad said, "Well, you can keep working those crazy hours, but I'm going to start waking you up at 7 in the morning. I want you to cut out 3 jobs from the Star Ledger that you're going to interview for every day and tell me how you did it if you want to keep living here." So I said, "All right." So he cuts one out one day for cash handling experience because I had a lot of cash handling jobs in college,
Okay.
and I interviewed over at the time SGC Federal Credit Union. I still remember when I was being interviewed, the person asked me, "Why do you want to work at a credit union?" I said, "I don't know. I don't know what the hell you do." Worst interview
Wow.
answer ever. And but they wound up hiring me anyway, which was kind of funny. And I was almost thrown off by it. I figured it would be a job I'd had for a couple months because I'm a psychology major with a minor in English literature. So I
Yeah.
mean, it was not exactly what I was thinking I was going to do with my career. But then
Yeah.
about 4 months, 5 months into tellering, a job opened up in marketing as a marketing assistant. And I said, well, this is more in line with where I can put my degree to work a little bit if I learn the ropes. And I learned the ropes from a guy who's got a pretty prominent job still at American Eagle Credit Union in Connecticut. And him and I stay in touch. He taught me all the
Awesome.
ropes in the industry and taught me the marketing stuff. And I learned to like it and get pretty good at it. And the rest is history.
It's amazing. Yeah, the fact that you've managed to stay in the industry and only been at a couple of different credit unions
Yeah,
across
me
your whole
too.
career is amazing. Tell me a little bit about that kind of journey, that progress as you went through the ranks of Pinnacle and then moved to
Yeah,
Garden
well, as,
Savings.
as I mentioned, I started as a teller, did that for a while. Wound up being a marketing assistant. Well, then the guy who was mentoring me went back to Connecticut, which was his home state 2 years later.
Hmm.
And so I got his job as marketing manager. And then the credit union was growing at the time. So then they made me an AVP of marketing. Then they needed me to handle compliance too, which is a weird combination, I know. But I became
Yeah.
VP of marketing and compliance. And then, after 16 years there was some change in the management, which inspired me to start looking. And I wound up here at Garden Savings, where I came over, and after a couple years heading up the marketing function, I wound up becoming the chief sales officer, which put me in charge of marketing, lending, business development, and training. So I wound up with a lot of different hats. And then 2 years ago, my boss, who was one of my mentors, our CEO, Lou Viteri, he retired. And I became CEO in January of 23. So it was, really progressive path. I never had to take any steps backwards, which I'm thankful for. I know a lot of times in order to grow, people have to take small steps back to go forward. I never had to do that, so I was very happy with the way my career shook out.
Yeah, it's great. I feel like it's one of those stories that like it's almost the prototypical American dream kind of,
Yeah,
starting
yeah,
at the bottom, work your way all the way. But it's a rare story
yeah,
to hear that these
yeah.
days.
Well,
So I think it's
my father, he was the president of a company, not in a financial institution,
okay.
but he was determined that, that American dream type thing. And he's got three kids.
Sure.
I'm in finance. My sister's a teacher. My brother's a police officer. So I mean, he kind of
Look at that.
drafted it up the way it works. Yeah,
Yeah, checked all the
checked
boxes.
all the boxes.
So when you moved from Pinnacle to Garden Savings, what were the big kind of differences that you noticed between the two credit unions? I know the different sizes. What were the major things that you saw?
Well, at the time, Garden Savings was actually a little bit smaller than Pinnacle,
Oh, wow, okay. Yeah.
so I actually went to a little bit of a smaller shop, but I was
Okay.
so impressed with their leadership in the interviews. I remember I had one interview, 2 hours with the person who was originally my boss, and then an hour with the CEO. So it was one 3 hour long interview, and I was just impressed with how professional they were. It seemed like a way to
Hmm.
ratchet things up, and I knew there would be a little bit more pressure, but I also knew that I was ready for a challenge. I was kind of getting a little bit bored in my old role, and I knew there'd be more
Sure.
to do here, and I knew they were growth minded, and that's always a good thing.
Now, obviously, you've merged with Pinnacle. It's kind of come full circle.
Yeah, that was
Um,
interesting. I stayed in contact with a handful of people there. They downsized over the years, and so there
mhm.
weren't many I still knew. But I think of the 20 employees that came over, 6 of them were there when I worked there. So yeah,
Wow,
so I still knew 6 of the people that came over, and
amazing.
I knew probably 3 or 4 of their board members. And we took 2 of their board members onto our board now. So
Sure.
it was an opportunity, staying in touch with people, and this industry has a lot of stuff built around networking and staying in touch with people, and it's all, you never know what comes back around, and this is a good example of that. So I don't know if now I get to say I've been at one job for 32 years or not.
Look, you're the guy who's in charge. I think you get to say, you get to define where you've been for 32 years.
Yeah, yeah.
It's interesting that you've combined the boards as well. What are those relationships like? When you're bringing over those board members, what are the intentions, and
So far, so good.
how's that
Yeah,
worked?
so far so good. The intentions are to make sure that the credit union keeps its legacy, right? I mean, we want their board members to help us and keep the Pinnacle legacy alive too. They're actually 6 years older than Garden Savings. They were founded in
Wow.
'62. We were founded in '68.
Yeah.
So it's been seamless so far. We expanded our board from 7 people to 9 people, but they're fitting right in, and all's good.
That's awesome. No, you'd been at Pinnacle and you kept in touch, but when you were as
Yeah,
kind of, with your Garden Savings CEO hat on,
yeah.
when you were looking at that, what was the sort of intention behind the deal?
Yeah, from a business standpoint, the motivation was 2 things. One, there's always strength in numbers, right? So adding 95 million to our asset size is a good thing. I mean,
Hmm.
getting more assets, getting 11,000 more members is good. But I'm also intrigued by the market footprint. We have North Jersey branches here. We
Sure.
have 2 in Morris County and 2 in Essex County. Now
Hmm.
we've got their 2 branches, which are in Ocean County and Middlesex County. So it expands the Garden Savings footprint. And we already had members down there, right, that have been
Hmm.
clamoring for us for years on our surveys. Why don't you open something down this way? Why don't you open something down
Yep.
this way? And I'm sure they had people saying, don't you have anything up north? The footprints that we have are always different, right? So if we can expand those footprints, it's a good thing.
Yeah, let's dig into that a little bit more. I think that's interesting in this day and age. I think a lot of people, certainly younger people, kind of perceive banking to be moving more and more online
Hmm.
and becoming more and more digital, and having that good online presence and a good app is sort of table stakes in a way for a lot of people. But tell me a bit more about kind of the importance from your perspective of that physical presence that you've got in these different areas.
Well, there's a faction of people that's still a big faction, I think, that still want to be able to
Hmm.
walk in. I mean, most of the
Yeah.
research I've seen anyway says that people, for their checking accounts or their primary transaction accounts, still want to be within 3 miles or so of their branch location. And
Interesting.
that's not everybody, because as you mentioned, a lot of people are growing up in the digital world now, and they're completely fine with
Hmm.
just having the digital presence. But there's still not a majority of them, right? I think some people, I think a lot of people out there still want to know that they can get to their financial institution if they have to. And still, I have people my age, I'm in my 50s, and, a lot of my friends I talk to, on Saturday mornings saying, I'm online at my bank, I'm like, you're online at the bank, or at their credit union or whatever the case might be. I'm like, why?
Yeah.
And, some people still want to do things in person, especially when they're taking out a lot of cash, and particularly if they're going on a vacation, whatever.
Yeah, I think it makes sense.
Yeah.
There's certainly plenty of reasons to go and
So
do
I
it in
think
person
that
by
adding
yourself.
these two branches, again, gives people more options. And, if they're within a radius that they're comfortable with, they're going to like having two extra branches to go to.
Yeah, 100%. And so when you think about that, there's two sides of that, right? You mentioned, you've got members down there already who have been clamoring for
Right.
branches. And on the other side of that, from a member acquisition standpoint, how are you thinking about utilizing that physical presence to kind of jump into the community as you kind of rebrand from Pinnacle to Garden Savings? It's like, here we are. What are you guys doing or planning to do
Yeah.
to kind of announce, hey, we're here?
Well, one of the things with expanding the market footprint, and one of the beauties of being a bigger credit union now for them, is that one of the things that is exponentially more is a marketing budget, right? So I think it will help to get out in the communities and really do more events, market, billboards, whatever the case may be. It just is a lot more opportunities than they're used to because they had such a limited spend. So we haven't done anything yet because right now their branches are still Pinnacle. We haven't done a system conversion
Okay.
until May 1st. But we plan to have the signage done right around the same time on the outside. It's going to be all Garden Savings, and then we begin our marketing efforts in earnest down there.
Got it. And that's a huge kind of undertaking, right? I'm sure that you are in the thick of it. What's that process been like, preparing and getting all of the staff ready and everyone on the same page? And then you've got this like target date, and it's going to be a big kind of, okay, we're pulling the switch,
Yeah.
and it's all going to change. How's that process been?
Well, let me tell you, my marketing people love that I had 30 years in marketing, and
I'm sure.
I'm giving them a hard time about how I want certain things done during this. No, it's been a matter of really just, as a CEO, my thing is always transparency and communication, right? You have to be transparent. You have to communicate. They kind of go hand in hand. And so it's a lot of talking to the staff, particularly at this point, I'd say their team, because obviously when you go through a merger to a bigger credit union, there's some worry and concern, and we want to do things the right way. One of the synergies we had with this credit union, knowing it firsthand because I worked there, was that they're really member driven, right? This isn't out to be, nobody's looking to become $5 billion overnight. We're not trying to look like a bank. We're trying to look like a down-home financial institution where you can get banking done. But we're not even purporting to try and look completely like a bank. It's something different, right? These are both credit unions with community roots and loyal to their members, and thankful for the seg groups that have comprised the membership for all these years. And our styles are similar, and that's really the biggest synergy of the whole thing.
Yeah, so you've got a lot of overlap, and I feel like that's one of the things that drives success when you have a merger is when you've got those kind of shared values.
Yep.
I think this is kind of an interesting thing to sort of dig into. As the CEO, I feel like it's somewhat counterintuitive to hear that, like, hey, it's not, we're not just trying to become a massive, $5 billion bank. We're community driven. Can you speak a little bit about, what the mindset's like for you when you're, having been in the credit union industry for so long, how you bring that sort of community value to the goals for the business?
Yeah, well, I've always been taught, and I've always believed that if you do things right, good things happen, right? So if you're leading with the mission of we're here to help people and do, quote unquote, the credit union thing, right? That's what we're here for. So if you lead with that, and then, people do need to understand that obviously you need to be a profitable institution to stay in business. So you need to make profits to pay salaries and keep the lights on, but it's not why we're here, right? It's not the why. If the why is strictly to make money, then you start becoming and looking a lot more like a bank. If the why is really more about helping people, and then you build the profits around the why, it's a much easier sell to your staff and to your team. And it's accurate, as we are not-for-profit financial institutions that are here to serve the financial needs of our members. That's the primary mission. And without that primary mission, you start to look like a bank that's paying shareholders. So build it around the right reasons, do the right thing for your members, and hopefully the profitability comes along with it. Of course, you have to pull the right levers and make the right decisions and,
Sure.
make good spends and cancel bad spends and do whatever you can. And you're not going to get it right all the time, but you have to keep the mission in mind first and foremost all the time.
Yeah, that makes sense. I suppose from a profitability standpoint, what's it been like the last couple of years? I know the landscape has changed
Yeah.
significantly, right, with interest
No,
rates,
I mean,
and what's that been like?
full disclosure, I mean, you can go on NCUA and see our financials. We've struggled the back half, particularly of 2024 and first couple months this year. The lack of speed in how much the rates are dropping federally have hurt us. We did a lot of lending to undocumented people in Dover and in Newark, so that has dried up a lot with deportation efforts.
Yeah.
So there's been a lot slower business. So it's been a little bit of a struggle for the last 5-6 months. We're trusting that we're making all the right decisions, or at least the vast majority of right decisions, so that we didn't change that much. The world around us changed financially, and it's starting to change back, I think, but it's going to take some time. So if we keep making the right decisions as the environment around us changes, we should start moving back to a significantly more profitable position.
Yeah, I think, and that makes sense. You have to, plan for what's coming, right? You can't just be reactive to these sort of shocks,
Right.
if you will, that are happening at the
Knee-jerk
moment.
decisions they rarely work out well.
Right. And so it sounds like, it's been a very challenging time, and then you've got the merger on top of that has been happening concurrently. And I'm sure that that's a big part of, when you're talking about, hey, we're making the right decisions for the future, I'm sure that's a big part of it. What are the other kind of initiatives that you're kind of hoping to implement in the coming months to kind of, push back towards that profitability, or give yourselves the opportunity?
Well, we're looking at other alternatives, different lending solutions. We've been kind of quiet on partnering up with new people while we didn't need loans because, we're about 85% loan to share, and plus we had some borrowings in order to fund that. We went into this saying we're not going to turn off our home equities for a while or turn off auto lending. We said we know we're going to get a little less profitable for a while, but we're not going to take away from what we're offering to the members, right? So we want to continue to offer our services, and that's what we've done. So I think going forward, we're talking to other, partners in the industry about how we can, possibly turn some things on. It might be more toward the back half of 25, going into 26, but we need to start exploring what's out there and looking at different products and services that not only could be beneficial to the members, but could benefit the bottom line directly. So, with non-interest income opportunities. So once we get past the merger in particular, right now I'd be lying to say we're sinking our teeth too much into anything but that. But I suspect by the middle of summer, we'll be really entertaining what's out there again and starting to expand our horizons. And hopefully that's, moving in the same direction as our profitability, which is forward.
Yep, makes sense. And from a partnerships perspective, when you're thinking about those opportunities, is it kind of like there's lots of demand to partner with an organization like Garden Savings, and so you're kind of reopening the door, or are you going out and kind of actively seeking partners? How does that work?
A little bit of both. A little bit of both. If I see something, I'm a research guy, and if I am looking online and I see something intriguing, I'll put it to our marketing team mostly, and say, do some research on this and let me know if it's something we should dig into more. And then, of course, you've got 8 million people calling you, looking for meetings and sending you emails with their products. So calling through those is difficult sometimes. One of the sayings I use around here is you don't know what's out there until you know what's out there. So you've kind of got to look at everything that comes your way and see what's up. And, ways to make the credit union better, whether that's something for the members that makes it better that has profitability tied to it, or even if it doesn't, or if it's something that's more directly tied to the profitability, which inevitably, even if it doesn't directly benefit the members at first, will benefit them later because we're more profitable.
With organizations that you're partnering with, do you have like specific things that you look for? Well, obviously, you've merged with Pinnacle, and that's like a big overlap. Do you kind of look for those shared values in partners that you're working with as well? Is that a big part of it?
I like trust with people. Some of our biggest partners and people that we work through that recommend us products, even if the product doesn't work out, I trust. There's a couple brokers out there that I really, really trust on certain products and things. And if it doesn't work out, it's just because it didn't work out. It's not because somebody's jamming a square peg in a round hole and trying to get us to buy something just to boost their sales stats. So being strategic about who you work with, those shared values, trust is a huge factor, and and not being too pushy, because a lot of people try and move you products that you might not necessarily need, or that you say, hey, I need some time on this, and you're getting an email every 3 weeks. That's not exactly what I mean when I say I need a little time on things. So let the relationship grow first. Building relationships is such a key piece of this industry, and I've heard people say that relationships don't mean much when it comes to business. It's all about business, and I couldn't find that further from the truth.
I 100% agree, and I think certainly that's something that we've found with Ostrich since we've started working with credit unions. This is just a massively relationship-driven business, and it's so collaborative.
Yeah.
I think that's one of the things that we've really enjoyed about being in the space. It's just the kind of level of positivity and wanting to work together with other businesses that traditionally you might think of, like in the banking world, for example, would be direct competitors. It's like that level of collaboration is really refreshing to see and to work with. From a kind of member growth and member benefit standpoint, what are some of the initiatives that you target in terms of their kind of wellness and financial wellness? Like what are the things that Garden Savings is out there doing?
A couple of years back, we decided we were going to put a couple people through cross-state credit unions FinCEP program, so that we had financial counselors at each branch. That I think was important. And while we don't have a ton of appointments going through them, the stories that we get from the members that have used it have been, really positive. So if I was looking at, is it worth the cost of it for the amount of inquiries we get, I'd probably say no. But when I look at the dozen or so people that they meet with every year, the stories are great, right? So I mean, that's a very member-facing product, and just trying to see what people like, right? If somebody's interested in a yield on a savings account, then we came up with like a new savings account that pays on the front end of the balance that people seem to love. That's been a huge hit. And we don't try and reinvent the wheel. I try and look at what other people are doing that's successful, while also listening to the members, the feedback. We do regular surveys after every transaction, almost like an open table. So we always solicit feedback whenever there's an in-person transaction or a phone transaction. And then once a year we do a big all-member survey, and it always ends with an open-ended section so we can hear feedback. And then we have at least one, sometimes two, lengthy meetings on, here's what we found in this. Let's print every single comment out, sit in the boardroom for 2 hours and go through it and see what is an addressable concern, if it's something that's a quick and easy kill, or what is something that, hey, we should look into this. And and that's again all part of being the financial cooperative, is hearing what your members want and not necessarily thinking what's best for them.
So feedback's something that we're really big on with Ostrich as well. So I'm interested to kind of delve in a little bit more here. How do you guys go about maximizing the participation in those post-transaction surveys, but also in particular kind of the big kind of once a year all member survey? How do you motivate people to take part?
The big one, we always put something, randomly pick 3 participants to win. I forget if it's $50 or $100 gift card. So we put some financial incentive on that. Hey, and we keep them short, right? We keep it to 5 questions. This isn't a big opinion research corporation 25 question thing, because we're going to lose people. And we look for a statistically relevant sample size to really report on. I'd love to get even more people to respond to it. So we'll see if we get a lot more with Pinnacle, and because we as managers have a bonus program, and we get corporate goals every year, and one of them is our NPS score. So if the NPS score is tied to it and it's tied to the employee's wallet, then they're going to encourage members to take the survey, right?
Are you at liberty to share what the NPS is for the organization?
I don't mind sharing it, but I've always wondered if we're because depending on where you look at it, let me do the horrible thing here and ask the questioner, what do you consider a good NPS score, before I answer that?
So I think it really depends on the industry, doesn't it? Like you need some context there. I know that we've been able to get to hit an NPS of 62 that we're like thrilled with, but we're also, there's a lot of in-person events. And so, we're not in the same kind of space
Yeah.
where you would say ours is
Yeah.
directly comparable with
Yeah.
yours.
Well, ours is
But I think
72. So
there you go.
yeah. So
You're absolutely flying. That's
but I've seen
fantastic.
different scales where like people, and I guess to your point, it's the industry, because sometimes I look and I say, wow, we're killing it. And then other times I go, whoa, how does somebody get a 91 on that? I mean,
That's great.
yeah, it's crazy. So, so 72 is what we strive for. Last year, I think we hit a 74. But this year we kept
It's amazing.
this. Normally, when we do that, our board will have us increase the goal because we already hit it. But this year, I said no. Keeping it the same is a challenge because we're going through a merger, and mergers, no matter how well you do them, there's going to be people that don't like it, so that'll drag the score down
For
a
sure.
little bit.
For sure. That's amazing though. I think that's
Yeah.
brilliant that you just to hit a 74 is fantastic.
Yeah.
Are there other things that your members really love that you've been able to maximize with them, and that's kind of driving that NPS?
Most of it is well, I'll tell you one thing that's helped the NPS a lot, because a few years ago it was 67-ish. I think the very first year we did it, it might have even been 65 or 66. One of the things we did go for an AI system for answering calls, right? And it's only answering about 23% of the calls right now, but that's 23% less volume that clears up our call center to answer calls. So they were getting dragged down. So some of the biggest complaints we used to have were that their call didn't get answered, they were on hold forever, someone didn't get back to them in a timely manner. With the AI, even though 22%, 23% doesn't sound high, that's significant when it comes to clearing up time for the call center folks and branch folks to answer those questions. And we can kill the quick kills with the AI, which, by the way, will hopefully continually get better. And I think that's been a big driver of it, is that we can address certain calls ahead of time.
Is that the only place that you're using AI, or are you looking to fold it into other parts of the
For
business as
now,
well
it's
as
the
you
only
kind of move
place we're
forward?
using it. I've looked at some of the things that are tied to loan origination systems. I've looked at AI, on the website, to answer questions with a data bank. I have mixed emotions on that, because to me it's still a frustrating experience for me. I very rarely get the
Sure.
answer I want when I'm on someone else's website and there's a data bank there. I wind up just typing, speak to a human. How do I get a human? So I have mixed emotions, but again, I'm trying not to let my experience be everyone's experience. So there may still be a lot of validity to it.
Yeah, and like you said, it keeps getting better, right? So at some point, I'm sure it'll be really great,
Yeah.
at doing the chatbot thing. But I would align with you in that I'm often finding myself just
Yeah.
speak to a human, or if I'm on the phone, is 0000, give me to a representative. I know I have a very specific question that I want answered, and I know you're not going to do it for me.
Right. Yeah.
I suppose, kind of tangential to AI or related, what are the big kind of changes that you see coming in the sort of next 5 years for credit unions, technology or otherwise? Like,
Yeah,
what
well,
do you see in the
I
future?
think technology is the biggest, first and foremost answer, because of all the fintechs that come out. I do think, from a consumer standpoint, if all this deregulation continues that's going on already, that's already started, from a consumer standpoint, I would caution them to be very careful, because there's, with a lot of deregulation out there, you're more likely to step into something that isn't good. So in a weird way, I'm hoping that spins stuff back to more traditional financial institutions, such as credit unions, of course, but even banks too, because let's face it, they're a little more stable. When people go around chasing rates and looking at every fintech that pops up, obviously when you first come out, especially, you're looking to steal market share, right? So you offer things that could change on a dime. But that being said, fintech is still the biggest thing, because what are they coming out with in the next 5 years? I don't know. You're interviewing me now with glasses to talk to you. So,
It's true.
so I mean, it's almost hard to keep up with everything going on. So,
Yeah.
but I do think the biggest changes will be on the fintech side. Deregulation will be a big piece of this. If it continues to go down the road of deregulation, how does that affect things? We've all heard some of the stuff going on with the CDFI funding and things like that. We're not a CDFI institution, and I did read today that it looks like those funds will stay in place, thankfully. But nonetheless, there's a lot going on where there's a little bit of chaos, obviously, going on right now. From I'm playing that neutral, but it's a little bit chaotic out there where I think it's very difficult for people to predict. But the biggest challenge for credit unions remains the abundance of competition, particularly those that do their own fintech, because we obviously have to outsource all of that, which comes with a huge cost. So yeah, fintechs are where the industry is going, and I don't know if our membership is super fintechy, so it's going to be a combination of walking us, growing the fintech side as much as we can, because generations age, right? So it might not always stay that way,
Yeah.
but also keeping these branches for our members and staying true to the services that we already know they do like, because they're not going anywhere overnight, thankfully, and they're how we do our business, and we do have to not only provide them more of what they want, but also keep an eye on how are we going to provide what people want going forward for future generations.
Yeah, and is that a dichotomy there where you see like there's not much overlap, or actually, when you think about the younger members that you do have, is there more overlap than perhaps, your average person on the street might expect between,
Yeah, I mean,
younger and older
particularly
credit union
in
members?
the cities that we're in with Newark and Dover,
Hmm.
they're kind of age agnostic to who's walking in that branch. I mean, we have
Interesting.
as many 25, 30-year-olds walking in there, and I can take a reasonably good guess that it is related to the areas, right? They're more urban areas, underbanked areas. One of the things we pride ourselves on is our Dover branch is primarily in a Hispanic area of Dover, and our Newark branch is in the ironbound section of Newark, which is primarily Portuguese and Brazilian. We staff our branches with people that are fluent in those languages and dialects. And so I think that gives a tremendous amount of comfort in those areas for the citizens of those areas that want to have a conversation with someone in a language they're more comfortable with. And so we have that at all of our branches. We try and fit into the culture of where our branches are located. And I think that is a huge piece of why we do so well at those two particular branches, and why they're by far our busiest foot traffic branches. And again, they're age agnostic.
Yeah, that's really interesting. Actually, it's not what I would have expected at all. But it makes sense. I mean, ties into the idea that you have this really strong NPS that fits with the idea that like, hey, we're going to meet our customers where they are and make them feel comfortable, and especially for people who are not necessarily from this country. I feel like I mentioned before we started recording that I was born here, came back as a kind of 18-year-old. And coming back as an 18-year-old, it was like restarting financially all over again and having to kind of get a credit score. And, why is that even important? And where should I put my money? And, I'm coming from the UK, which has a very well-established financial system. I speak the language, and I'm a citizen. And I can't imagine what it's like for people who don't speak the language as well and who don't necessarily have citizenship. So providing them with those tools, I can imagine is incredibly valuable.
You mentioned
for them.
credit score, and one of the things that we used to be affiliated with a group in Newark called Stop Shooting, which helps kids, not hang out on the streets and instead focus on being entrepreneurs. And
Awesome.
the guy who ran that group, a guy named Yusuf Ismail, he used to bring me in, and I would speak to all these young entrepreneurs, usually 15 to 20 kids, and the biggest oohs and ahs I ever got were over credit score, right?
Really?
You show people, here's how much you pay in interest with a 600 score your whole life, and here's how much you pay in interest with an 800 score your whole life. And I'm like, you could buy 4 more cars than in the amount with the money you save over the course of a lifetime. And that was always a very powerful piece of that. So educating people, and again doing the credit union thing and explaining things like that, I think is super important to success and finding your niche, right? Credit unions have to find their niche. Banks, everybody knows the niche is they're a bank. They have everything, right? So what's your credit union's niche? How are you standing out? How are you making, what's your differentiator? For us, it's not just walking the walk of the, where we pride ourselves on service. Well, we do, but we want to show it, right? We want to be part of the community. We want to show it.
Yeah, 100% agree. I think when we were looking, the stat that we found was like you'd pay an extra $400,000 in interest over your lifetime, something like that. And I'm sure it's it's obviously now if you run the numbers again, it'd be significantly higher.
It's crazy.
So it's an insane stat. Okay, so let's do a couple of like quick
Sure.
hits. What's a book or a podcast or a resource that you'd recommend to other credit union leaders that you think is really valuable?
I'll tell you the most influential book I ever read for me was probably about 15, 16 years ago, I guess. But it was Blink by Malcolm Gladwell. And
Mm,
I just found that book I think it's very important for leaders, primarily because everybody always talks about gut instinct and, going by your gut. And I think the biggest thing I ever learned from that book, which is a short and easy read, by the way, was that it might not necessarily be a gut instinct. It might not be your gut. It might be parts of your brain that aren't always in your conscious that say you've seen something that's tucked away in your memory somewhere that is telling you this is the better decision. And for me,
mm,
that book helped make me a lot more confident in my decisions. I don't think I make every decision right necessarily. I
sure.
definitely do not. But I don't question myself an awful lot. Here and there, I do it, and if every now and then, if something doesn't work out, I'll say I reserve the right to change my mind on something because it didn't work out. But I think it helps. I think that book helped me in being decisive with my decisions and saying, I think there's a reason I think this is going to work, and going from there.
Every single book I've read by Malcolm Gladwell has been an easy read.
Yeah,
Has been
yeah, it's great. I know
well
he's a
through.
kind of a style that people either love or hate. It seems he's kind of polarizing, but I love the books I've read by him too.
Yeah, yeah, absolutely. So you talked a little about how that's informed your leadership style. Could you describe your leadership style in 3 words? And if you want to go more than three,
No, no,
I'll definitely
three's
allow
pretty
it.
easy for me, because communication and transparency. You could take a straw poll of the 90 employees we have here now, including the 20 new ones we just got from the merger,
Hmm.
and they will tell you Mike hammers home communication and transparency. Everybody here would know that because I say it all the time. Communication and
Yeah,
transparency. Third word, I guess, would be integrity. Do things the right way. Kind of back to what we were talking before. Do things the right way, and things tend to work out. When you start doing anything that's kind of shaky, you're setting yourself up for trouble. So yeah, communication, transparency, integrity,
yeah. The kind of a what goes around comes around
and fun would be
sort
the
of
fourth
attitude.
word. Fun would be the fourth word. You got to keep it fun. When people don't like coming to work, you've got other problems. So you got to keep it fun.
Let's just dig in there a little bit. What kind of things do you do? How do you like to keep it fun from a work
Yeah,
perspective?
just little things. I'm kind of quirky where I'll make up my mind on something that right before. Like recently, St. Patrick's Day just passed,
Hmm.
so I'm half Irish, and it was Thursday, I think it was, before St. Patrick's. I go, you know what? I go, let's add an extra jeans day on Monday. Let's do a greens. We'll call it Greens and Jeans Day, and we'll just everybody that wears green can wear jeans. And then in the summer every year, we have a pretty big parking lot here at our headquarters, so
Hmm.
we actually close early by an hour one day and invite
Okay.
all the branches up, and we do a parking lot barbecue. We get food trucks in here, get beverages for people, play music, do karaoke, all right in the parking lot.
Awesome.
So we did, little things like that, just giving people something to look forward to. We still do a Christmas party here. We have a very well attended Christmas
Nice.
party, which is the one time a year we get to meet everybody's spouses and stuff.
Yeah.
And yeah, and we still do that. And yeah, we just, I have a good friend from home who I've been friends with since we were kids who always says the trick to having fun in life is always having something to look forward to. And I try and make sure we always have
Yeah.
something fun to look forward to.
Yeah. I think that's great. So I went to Rollins
Okay.
College down in
Yeah,
Florida,
yeah.
and one of the big traditions there is called Fox Day, and it's like a one day a year in sometime in April. They cancel
Hmm.
classes and they have a big party. Everybody goes to the beach. Sounds
Yeah,
very
that
much
sounds
like
great.
the less professional version
Yeah,
of the summer tailgate for garden
yeah,
savings.
yeah. We
The
just
college.
sure you gotta have fun. You gotta enjoy stuff. Yeah.
Yeah, absolutely. If you weren't in the credit union industry, what do you think you would be doing?
Hmm. Tough one. I think I'd probably be one of two things. I'm a big sports fan, so I would love to
Okay.
have been in announcing and broadcasting. I like
Yeah.
to talk, and I love sports. So I mean that's one area that I sometimes say, oh, I wonder if I could have made a career out of that. And then the other
Yeah.
one would be writing. Many years ago, I wrote a fictional novel and self-published it and sold
Oh,
about 2,500, 2,600 copies. So
awesome.
that's kind of like what I look at as my retirement job is doing writing, and whether that takes the form of fiction again or some kind of reviews or things like that. of restaurants or whatever the case may be. And probably something to do with writing would be what I'd do next when I retire in, I don't know, 13 years or so. So
I can see. I mean, hey, maybe you're about to write in a newsletter about
that's
WWE.
true. Yeah, we
Combine
can circle
the
back.
sports announcing with the
Start, go back
fiction.
to where it all began. Yeah. Yeah.
I can imagine it. Or I feel like, maybe there's a radio show there for you and Tom Quigley
Yeah.
at
Yeah.
CMO. I just
We just can't have.
can imagine that.
Yeah, when before we hired Tom, they used to call me the voice here. Even when I was back at Pinnacle, we used to work with a guy
Sure.
in Washington named Wes Williams who used to call me La Voce, which is the voice.
Okay.
And
Yeah.
and then I hired Tom, and I'm like a church mouse now. So yeah,
He is the very definition of a booming
yes, he
voice,
is.
that
He is.
man.
He is. Yeah.
As close as I've
You
ever
can
heard
ask our
in real
CFO
life
who
to that.
shares a wall with them how much that voice
Okay.
goes.
Yeah, he hears every phone call, I'm sure. Um, Fantastic. This has been so much fun, Mike. So last couple of things. Where can listeners connect with you or learn more about Garden Savings and the merger and everything?
Well, as for me personally, I'm on LinkedIn. Just search for Michael Powers at Garden Savings, and as far as merger, we have a whole Q&A on our website, which would be gardensavings.org. Obviously, all our products and services are there, and the ability to join the credit union. So, yeah, connect with me on LinkedIn or find our website and check us out.
Awesome. And any final words of wisdom for other credit union leaders?
For those of the other credit unions out there, and I know there's a lot of them that are, having some tough financial months too, I would just say, stay the course, trust the process, and again, going back to believing in the confidence you have in yourself that you're making the right steps, that as the world changes around us, we'll all be in much, much better position, and hopefully back to the significant profits and growth that we were all experiencing a few years back, and hopefully that's sooner than later. But stay the course and hang in there, everybody.
Brilliant. Thank you so much, Mike.
All right, thank you,
It's been
Andrew.
wonderful.
I appreciate it.
Thanks for tuning in to Nest Egg Narratives, powered by Ostrich, the platform helping credit unions grow membership and drive financial wellness. If you enjoyed the show, be sure to follow and share with a fellow credit union leader.